Hello guys, so on this episode, we'll be talking about another popular momentum indicator known as the Relative Strength Index, which is the RSI. So I'm going to teach you how to use the RSI indicator properly and how to use it to be more profitable in the market. So briefly into the table of contents, RSI, understanding RSI, practical applications in Forex trading, advantages of RSI indicator, limitations and considerations. We have the tips for effective use and conclusions. So we're going to talk about the RSI, what and how to use an RSI, the components of RSI, the uses of RSI. And then finally, we're going to look into the advanced strategy, which is how to use the RSI and a moving average. So what is an RSI? An RSI, the full meaning of an RSI, like I said, is Relative Strength Index. As you can see, it automatically explains an idea for a momentum. So it's a momentum indicator used to measure momentums of a price current data. How do you use it? You use it in the charts to know where to buy and when to enter a sell and buy position. Now, the components of an RSI. We have the RSI, which is the blue line on the image here, and we have the RSI-based MA, which is the red line, which is a moving average in the momentum of the RSI. So it makes it a lot more easier for you to understand the direction of the market, because like I said, the moving average helps you give you an idea towards the direction of the market. So how is an RSI used? Now, it helps identify overbought areas, which is on a 70 position or 70%, and an oversold area, which is on a 30 position or 30% zone in the market. Here we have going to explain how to use the RSI indicator. Now in the picture we have our EU graph, and in the EU graph you can see here we have on the price data on the highest area, which I have highlighted, you can see that it's circled out, and when you go to the RSI on the same area, you can see we are above 70%, which is the overbought area, signaling a possible sell. So it's a relatively expensive area, and when things are expensive, you don't buy. Nobody wants to buy them in an expensive area, so automatically it goes down and the price goes down and it's being sold for a discount level. So that is how to use an RSI. And here there's a bullish explanation, a bullish formation on how to use an RSI. So you can see in the highlighted area, we can see where there's a change of character, where the price automatically falls down and goes for a buy. And here, as it's highlighted, you can go to the RSI, you can see it's below 30, which is an oversold area, which is relatively cheap. So on cheap things, when you find cheap products or you find things at discount, you're most likely to buy them more or in excess. So when things get to an oversold area where it's relatively cheap, it's where buyers come in. That's where people want to buy for when it gets expensive to sell. So this is how to use an RSI, again, for a buy or for a bullish signal. Now, in an advanced way on how to use an RSI with a moving average, you can see we have the moving average, 200 moving average, the general moving average, which I've explained to you in my previous episodes in previous class. So we have the moving average. And then you can see we on the left side, we're already in a bullish zone. We're already in a bullish trend, which we're already in an uptrend because the price is sitting on top of the moving average. So now, as you can know that when the price goes to an overbought area, which is relatively expensive, you know the price is bound to fall. So once you see the RSI take you to above 70% or the 70 zone, you should be looking for a possible sell signal. So you can see on the image which I have circled, you can see I have a sell indication. So automatically when you see the RSI gets to 70%, you automatically sell. But this is where traders get it wrong. And this is why you're in my class, so you don't make those kind of silly mistakes. Everybody thinks that when things get overbought, once you see an overbought position on 70%, automatically you just take a sell. No, you need a confirmation. You need a confirmation. When things get to oversold area below 30%, you don't just buy. You need a confirmation. You need to know if it's accepted. You don't just buy. I can tell you, hey, I want to buy your iPhone for $700. Doesn't mean I would actually sell the phone for you for $700. You need to confirm from me that I said, okay, I will sell it for you for $700 before you bring your $700 to me. Because if I don't accept it, I wouldn't give you the phone. So you need a confirmation. You need that confirmation. And that's where traders get it wrong. So once you see the relative strength index, which is the RSI, go to the overbought position, you don't have to sell immediately. And that's why the moving average is there. You're not losing on anything. People think, oh, I'm losing, the time is going, the market. No, the market is not going. The market is right there. It's open 24 hours a day for 7 days, a week. And if you want to trade into the weekend, you go trade stocks, or you go trade cryptocurrency. I mean, it's always open. So when you see an overbought relative strength position on above 70, it gives you the first signal for sell. So now you know that it's gonna become bearish soon. Now, when you can confirm that you want to take a sell, it's when the price falls into the moving average, and it has to fall under the moving average and then find a resistance there. So obviously when it falls down, the price is going to go to the moving average to see if it's going to break above the moving average. And when you see it cannot break above the moving average, and the moving average has decided to create a resistance like a ceiling, then you can look for an entry. There's no possible way the price will go above the MA and go back up. But if you were to take it without it getting into the moving average as a support or resistance, there's a possible likely chance that the price will go above again and then kick you out and then fall. But you need that confirmation before you get into a trade. So you first check for the trend reversal through the price, and then get to the MA, and then confirm the MA position through a support or resistance, and then take your buy or sell bias. So this is another example of a buy bias in the relative strength index. So you can see the price falls below the moving average, and then you can see it's below the 30%, which automatically signals a buy position. But like I said, you don't get in until you get a confirmation. And in order for you to get a confirmation, you have to wait for the price to go above the moving average and find a support on the moving average, and you can see that it's not going below the moving average. And when you find the support, then you can take a buy. So you'll be sure that when you get into the trade, you are safe, you wouldn't lose your money, you wouldn't be stopped out, and you're going to grind for a higher risk to reward ratio. And here is how to use an RSI with a divergence strategy. Like I said, divergence in a simple term is like an opposite. And as you can know, the RSI means a momentum, and the price action means the current price data, which you can see with your eyes. And if a divergence is an opposite manner, you need to understand what an opposite is. So as you can see, as I have highlighted, you can see the price is scaling upwards on the area which I highlighted. So if you were to not use an RSI or a stochastic or other momentum indicators, it will be hard for you to know if the buyers are exhausted in the market. And that is exactly what the RSI divergence gives you an idea for. So instead of just saying, okay, it's gone to its overbought position, I should sell, you should be looking for a divergence to confirm that the buyers are exhausted. Now you can see the price is scaling upwards in the price data, but in the RSI, which is the momentum, which obviously shows the real strength of the buyers, you can see that the strength of the buyers are coming down. It means there's no energy, there's no longer fuel, or there's no longer buying power for the buyers. So obviously it's bound for the market to fall. So when you take a sell, it automatically falls. Very simple, guys. Then how to set up a relative strength index RSI. You just go to your indicator, click on your indicator, and then you type on the search button RSI or relative strength index, and then favorite it so you can easily find it. And when you click on it, voila, it automatically pops up, already set to your time frame, so you don't have to mess with it, you don't have to play with it. And then you remember how the strategies I have shown you and how to use the RSI and apply it and be profitable. So thank you. I'll see you in the next class.